Ever caught yourself thinking, I'll jump back into Bitcoin if it just drops to 25,000 pounds? Or I'll wait for Ethereum to return to its last peak before I sell? If you've ever done that, you're not alone. Welcome to the world of anchoring bias, a sneaky little trap that quietly messes with your trades. Anchoring bias is simple but stubborn. It creeps in when you fixate on a specific price point, maybe the last all-time high or a number you've heard shouted in the news. Suddenly that number becomes your North Star, even as the market sails off on a totally different course. Here's what happens. You set your heart on Bitcoin bouncing back to, say, 30,000 pounds. The price hovers above, maybe at 32,000 pounds, but you refuse to budge. Nope, you think, I'll only buy if it hits my number. Next thing you know, Bitcoin's racing up to 40,000 pounds, and you're left on the dock waving goodbye to the rally, all because you tied yourself to an anchor that the market had already abandoned. Or maybe it's the other way around. You remember Ethereum's last high, say 3,500 pounds. You anchor on it. As price climbs, you keep thinking, once it gets back there, I'm selling. Except the market's changed, the fundamentals are different, support and resistance have shifted, and your anchor is just holding you back from reacting to what's actually happening now. Anchoring bias is dangerous for three big reasons. First, it makes you miss opportunities. Waiting for that magic number means you could miss entire moves, just because you're chasing yesterday's prices. Second, it can make you chase trades you shouldn't. When your anchor is out of reach, FOMO kicks in. What if I miss out forever? And you jump in at bad times, risking more than you should. Third, anchoring blinds you to the facts. While you're stuck on old numbers, the market's already rewritten the rules. Pro traders, they don't live in the past. They treat every new tick on the chart as fresh information, not a reminder of where things should be. They adapt, pivot, and let probabilities, not nostalgia, drive their choices. Anchoring feels safe, but it's like trying to navigate with an out-of-date map. The market's changed, and if you don't update your bearings, you're heading for a crash. So here's the takeaway. Anchors are great for ships, useless for trades. If you want to thrive, especially in fast, wild markets like crypto, ditch the old numbers. Stay flexible. Let the market show you where it's going, not the other way around. The only thing you should be glued to is your ability to adapt. That's how you stop chasing prices and start trading smart. Remember, in finance, adaptability always beats rigidity. Join us and reach your next crypto level.